The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. Zip code 19174 if you want to send some nice gifts to the Gold grandkids. Hey, folks, let's take a look at some of these markets. Well, we have some things going on in the markets, but I think they're pretty exciting. The first one I posted, of course, is the DAX. We've been in that slide up trend here. We had a pretty good move with the rest of the world last night. The brains on the Bloomberg terminal said the reason why the market was moving is because the responsibility was going to go into the Democrats now to see if they can get anything done, and that's why the things rallied. But you know, that's neither here nor there. We do have a. Let's get up the FTSE too, so you can see that one, because it had a really big opening range and had a pretty good run to the upside. And then I'll start giving you what I think my 2 cents worth. If you remember, we didn't think this was going to be like what happened in 2016 for a whole lot of different reasons. The main one is I believe that we are in a bear market. We're not in a bull market anymore. We're just going to have these really wild swings. As you can see from election night, when we were down the limit, you know, we really did very little last night. We had some nice 25-point swings. If you followed the shorter term patterns all night long, it certainly did that, but you know, nothing really excited happened. It was you know, just pretty much copacetic. I mean, it was pretty normal. If you remember, we looked at this E-mini yesterday. This is the one that I sent out right during the election time, because we were looking for a price to get up there at around 27.80. We got to 27.87, I believe, backed off to about 27 whatever it was, and we're trading, you know, 27.76 or 7 right now. So that did exactly what it was supposed to do. I mean, there was nothing, you know, really exciting from that point of view. So that's one that you know, it's doing what it's supposed to do. There's not really much you can say other than that. It's hanging in there pretty good. If we look at the one that is, you know, the leader of the pack, which had been NASDAQ, you'll notice that we did pretty much the same thing here. We did go just a tiny bit higher than that 61% retracement last night, but all of them are still doing pretty much what we thought they were going to be doing. In the foreign exchange markets, that was a little different story, folks. We had a couple of really big things happening in the foreign currency markets, and the first one we want to look at is really, because this is the big daddy rabbit. This is the one that runs the whole show. This is the euro over the last several months. Well, the last 2 months, you'll see it's a 4-hour chart. You notice the time from October the 9th into the 14th, we had a move of 200 pips. And what did we do last night? We had a move of 200 pips. And it stopped right at the exact 61% ratio. It was just, you know, spot on there. If that's correct, that means that we should start to roll over in the dollar, or in the euro, and the dollar should start to strengthen. Over the last few weeks, I don't know what XLE is, Ruby, but I will try to look at it well, let's just do it right now. Folks, this old cowboy, I tell you, Walter and I are a little tired because we were watching the race for Senate here in Arizona, and it's still up for grabs. So I'm just a little bit tired. I will not be doing any trading today. I can assure you that. So we're going to look at XLE, hopefully. Let's see if we got it here. Shut the front door and raise the rent. You're in luck, Ruby. We've got it. So just give me 1 second here, and we'll get it up here. I don't know. Oh, boy, this data is not good. Just 1 second here. Refresh maximum. This is not going to be a... Yeah, this is not very good, Ruby, because I have a... Let me see what this... I've got an overlay in here. I've got to take it out. What is the overlay? The overlay is with the crude oil market. Oh, yeah, here it is. This is the XLE put this up here and take a look at it. I want to cover that. It's the energy section. It's very important that let's just go to the energy section right now, because something I believe very important happened last night. That's my 2 cents worth. But if you remember, we were looking for some really strong support coming in on heating oil at the 215 level, and that's exactly what we hit, folks. And when crude oil was getting hammered yesterday and we went below $62 a barrel, the couldn't even make a new low in heating oil. So that's telling you that support that we had there is really strong. That number is actually it should be at 215, because I was looking at the weekly chart on that. So keep an eye on that. That's what we did. It did hold that level extremely well. And then when we were really getting smashed in that crude oil contract, you'll notice what happened in the unleaded gasoline. It got down to $1.66, made a nice butterfly bottom there, and then rallied. So that we're in a potential rally here, and still in some of these contracts. So we've got to pay, really close attention to the crude oil complex in here, because it's at that same level. The news is getting exceedingly more bearish, and so just pay attention to that one, because it could be, I think, something that would be very, very profitable, because just a small rally in this could take you, a great deal higher. And I'm talking $3 or $4 a barrel. Hey, we rallied almost $2 a barrel last night while you were asleep. So, that in itself is quite a bit. So those are some of the ones that we're looking at. Now, remember that we talked about Apple yesterday and the importance, and I believe Apple's going to be up today because the rest of the market is up. We went down to that 198 and change. We hit 198.20. That was exactly the 1.27 expansion from the high of October the 8th, and so that tells you that that's the really strong support. Folks, I've posted these charts for all of the FANG charts, the ones that have been the Google, Amazon, Netflix, Microsoft. Well, it's not a FANG stock, but it's one of the big ones, Apple and Netflix. So I didn't do Tesla, as I'm not too interested in Tesla. If you have an interest, you have to let me know. But if we go below those lows of October 28th, that's the key. Because once we go below, and I think it's just a matter of time, is when we break below the lows of October the 28th, you're going to see another leg down. And by the people that follow Elliott wave, the first wave down, as you notice, stopped on October the 28th at the big ABCD pattern in the S&P at 2,600. So what that means is that when we go below that, that's going to set up leg 3. So leg 3s are usually pretty nasty, and so that's what we're possibly looking at. Until that happens, we still are in an uptrend, and today we did reach our objective of 618 and 78%, 78 and 50% level in the S&P up there at 2780 was the number. We got to 2787, I believe. So we'll see what happens. Hey, 15 points in the Nasdaq is nothing anymore. That's someone just blinking their eyes, because we're having some really wild swings in some of these markets. So we have to pay pretty close attention to them, because they do get a little bit interesting. We're going to take a little break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks, we're back. I want to go over this energy sector, starting with the crude oil one more time. You'll notice that big support was down there at 6,100. The low, $61 a barrel. The low was 61.30, I believe. We rallied up to 63 and change last night. So that's we're at a really important level. Now, we've been down 5-6 days in a row in the crude, which in itself makes it very oversold. So it's very important. Now, we talked about the butterfly pattern that we had in the gasoline futures yesterday as oil was making a new low. And if we look at the long-term picture today here in the crude, in the gasoline, you'll notice that the 78% level came in at 170. The low on this contract was 166.20, I believe, and then it quickly reversed a little bit. So we got to be very, very, very careful about being short this market. In fact, I'm long and looking to get longer. But anyway, let's watch the heating oil too, because that's the one that really was the key that the market wasn't going to break down very much. Yes, the low was 61.31. And I think that, isn't that what I said? I thought that well, who knows? I can't remember. All right, folks, I have a lot of fun with the election stuff because of my lovely little bride, Sarah, being from Hong Kong and being Canadian. She likes to follow the what do you call it, the politics part, and it was really pretty cool because she keeps track of the votes and everything, and she looks at all the different states, and we've been into a lot of those states, but some of them we haven't been to, so we have friends in a lot of those places, but it is very interesting to see the response, and believe me that a lot of those folks over in the UK were up all night watching the results, and the fact that market was not really doing very much all night long. It just basically ratcheted up to that 20 2780 level, and that's pretty much what it did. The real action, of course, was in the the foreign exchange. I thought it was anyway, because we had a 200-point rally off of the low in the euro right up to the 61% retracement. But the easy one, the one that was what we thought was the one that was really exciting, of course, was the Canadian dollar. Hopefully I got that here somewhere. I used to have it here, but let's just double check here to see if we can find it. There we go. We've got it right here. It was really amazing, because what we did is we rallied right up to that 61.60 level again, and immediately broke 150 points. I mean, it just dropped like a rock when the rest of the other currencies were not doing very much. So that's another one that we're looking at. Someone's asked a question is about the grain markets. Hopefully we're going to have Rich Anderson on at the break to talk to us about the margins and how the margins are calculated at the various firms. I don't know if you noticed or not, but Rich has retired from his business. He's just basically trading his own account now. He's probably working harder now than he did before, but he'll be maybe giving us a few more a few more things that we're looking at. There's talking about the Russell here, folks. If you take a look at the IWM, this is the one that is, hold on one second here. I've got the new IWM here. Well, just one second, boys and girls. I'll tell you why, because all my beepers are going off, and so I've got to pay a little attention to what's going on here, and it is good. This is what I wanted to see. Hold on a second. That's it. Good. All right, give me one other question here, and then I'll be right with you. The gold, I'll just paraphrase the gold. We got up to 1238 last night. The low, we rallied 10, 11, 12 bucks. Until gold gets above the 1246 level, folks, I still believe we're in a downtrend. But how far it's going to go, no one really knows. But it certainly still is in a downtrend. I believe here is the IWM. I just wanted to show you, because I believe that we would have hit the it's been a long month already, you're right, and it's only the 6th day. It's only the day 7. But you see, we would have made a 382 retracement this morning up there. I believe it might have hit it on the opening. If someone would check, Maria, check that for me to see if that IWM made a 382, because if we reverse to the downside today after that big run, we could be looking at something, pretty significant. Whether that occurs or not, we just have to be careful, and I think that's important. Now let's take another look, since we're talking about the currencies, and the UK has had a lot of stuff going on because of Brexit. They pretty much told everybody that it's a done deal, and if you believe that, I still have 2 shares of the Brooklyn Bridge. That would be right at the number, I think, isn't it, Jim? I think that would be pretty much spot on. Double check that for me. Oh, okay. All right, it's off a little bit. All right, here's the British pound. Here's another one last night. Hasn't moved much, only about 80 pips, but we did have that 135 pattern. We're in a downtrend here, of course, so we've had a heck of a rally. We've rallied 350 points since the end of the month. Right up into that 78% level. That's a 135 pattern. We've got the lower ratios there. Each one of those ratios is exactly 78%. So that pretty much tells you what you're looking at. Let's see, that number is 150. Let's call it 156. That would be it. 156 is the exact 382. Wow, that is pretty much spot on. That is the exact 61% retracement, folks. I think yeah, I'm sure it is. Let's just double check it. Let's just put this up here. Don't get too excited about 382s, Larry. Okay, move this up here. You'll see the 382. Look over to the right, 156. If they start down from here, boys and girls, it's not a good sign. That's all I can tell you. Who knows? One thing at a time. All right, let's take a look at, someone asked a question about a trade that we've been in for a while, and we've taken profits in it because it got down to the 54.75 level. Let's just get this up here in the hogs, and we'll put it up here. And Okay. All right. So that has completed a pattern there also. So we'll keep an eye on it. I'm not going to do anything in the grains today, boys and girls, because most of the stuff that happened in the markets was related to the financial markets and the fact that some of these patterns, especially the euro, I mean, that's the biggest thing in the world that we trade, and hit those numbers spot on. If we close above that 115 level in the euro, that tells us that the dollar has probably reached a level that's going to take considerable more time. If you'll remember that we were at that double top in the dollar index when we were at 113 in the euro. That was when the dollar index was right at 97. We were expecting a pullback. We certainly got that. We're down to below, I think we're right at just a little bit below 96 right now. We really need to hold the 95.40 level in that dollar index, because if we don't, this channel line will be broken, and then you're going to be looking at lower prices in the U.S. dollar, higher prices in the euro. It all stems on 115, folks. Above 115 in that euro, it tells you that you're most probably going to go higher. That's the way it would look like from the way we're seeing it. Okay. So that's what we're watching. We got to take a little break here now to pay a few bills, and when we get it back, we're going to go over a couple of these FANG stocks that I think deserve our attention. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Rich Anderson. And Rich, are you there?
You bet. Good morning, Larry.
Good morning, Rich. Well, how did the evening treat you, my friend? What do you think's going on in the world?
Well, it came. I think you're referring to the election. It came out about as expected. Where there's a split. Senate is controlled by the Republicans, and the Democrats control the House. And now it's up to them to decide if they want to investigate or legislate. If they want to produce results or just continue to fight. And that should be interesting.
I understand that there are 2 Senate seats that are still undecided. Is that correct?
That's my understanding too. That's my understanding. But the Republicans should be at least 51 Senate seats. But this is going to be I don't think our president really understands how dramatically different governing is going to be when you have a split between the House and the Senate. And it should be interesting. The scary part, Larry, is that every chairman in the House has the ability to subpoena and to investigate. So if they want to investigate rather than legislate, we aren't going to get anything done, and that will not be good for the stock market.
Yeah, I can certainly understand that. Rich, one of our listeners is asking, what do you think the odds are of that happening? Instead of investigating, they'll do investigating rather than legislating. What do you think the odds are on that? And how are all these committee members locked in stone, or can they be changed? Like, can Maxine Waters not be the banking committee chairman? I mean, how does that work? Is it all seniority based?
First of all, who's going to be the speaker? Initially, it's going to be Nancy, but Nancy Pelosi is 78 years old, and so she'll probably be a short-term transitional person that the Democrats will want to come with somebody, younger for sure, and ideally it'd be more centrist, but the party has been pulled way to the left. I mean, you look at some of the candidates that they had in Florida. I mean, practically a socialist governor candidate. Unfortunately, he didn't win, but I mean,
he almost did.
There's been this huge pull by Elizabeth Warren. I think. By the way, I think our Senator Amy Klobuchar is going to be running for president. She's very popular in Minnesota, and I think they're going to need to try and find somebody that's not so far out to the left that turns everybody off.
Rich, did that Larry Ellison, did he get elected Attorney General?
You bet. It was a clean sweep in Minnesota for the Democrats. Even the Sheriff Stanek was a pretty good centrist kind of a guy. They just pulled the D lever for everybody in this state.
Yeah, that's the way they do it usually. But Indiana was a big surprise this year, so we'll see. Rich, let's talk a little bit about margins for the folks that trade commodities. Give us an idea of how the margin structures work, starting at the beginning. And just tell us what you know a lot, so just tell us how the margins are calculated.
Well, the margins are set by the Chicago CME, Chicago Mercantile Exchange, or the ICE, or whatever exchange. The exchange is the one that sets the minimum margins. Now, I, as a brokerage firm, can charge anything I want. I can charge more if I want to, but I cannot charge less. Now, the day trade margins are a different item. Typically, a firm will charge 50% of the original margins as your day trade margins. There are some exceptions, as we were talking about a couple days ago. I know of a firm that charges $500 for S&P for day trade margins. My personal belief is that you're competing against the best, and you want to be over margin, not under margined. And anybody that's letting you trade for next to no money, and I consider $500 on an S&P contract next to no money, it isn't helping you. If you look at the big money managers in the world, like the John Henrys and the rest of them, their leverage is usually only 4 or 5 times. So if you're trading a $100,000 contract, they would have $20,000 to $25,000 up against that contract, and those are the professionals you're trading against. Now, the day traders on the floor, which doesn't exist anymore, that's a whole different deal. But $500 is pretty skinny, and that's how skinny the day trade margins can be at some of the firms. And then you get real volatile periods like we had back in February, and they'll all of a sudden say there are no day trade margins temporarily.
Yeah, I know they changed it around, but I can't believe that someone can give you a $500 day trade margin on the S&P with a contract value of $135,000. That's insane.
That's what I'm saying. They are not doing you any favors. But what they have, obviously, they have very good software to control the ability to liquidate your account if it gets close to zero, which they will do. It's not like the old days where you've got X amount of time to send in margin money. You just liquidate it out.
Yeah, well, that's
then there's one other margin above the original margin that firms will charge, and that's let's call it value at risk. And so let's say this happened to me last year. Had 150 contracts on in Minneapolis wheat. Let's to use round numbers so we can do it in our heads. $2,000 is a margin. So 150 times 2,000, that's $300,000. But because there was volatility in the market, they were the firm that I was clearing through at that time wanted an additional $500 above that, and so I've got plenty of money for my original margins, but not enough for value at risk, so I couldn't put more contracts on, and that was something new to me at that point. I'd never seen that before, but firms are allowed to do that. And you want them to do that because you don't want to be doing business with a firm that's not protecting their capital. Because if they don't protect their capital, then we can have another MF Global situation, and you know how bad that was.
Yeah, that was a bad one for sure. Rich, what's your feeling on the grains? We got the November beans, January beans trading at around 881 right now, and most of the harvesting is in. Any feeling on the grains? Wheat still look the best to you, or what do you feel about these?
Well, there's a crop report, and they're going to be looking at the exports, and they're going to be looking at the yields. And my opinion of all reports is, how does the market close tonight after the information comes out at noon Eastern time, 11 o'clock Central time? So how does the market close tonight? That'll tell you how good or bad the report is, and I don't try to trade in front of reports. I try and wait until after report and see if the market closes higher or lower. And the other thing is, are we going to get anything done with China? Former Secretary of Treasurer Paulson spoke today at some forum, and he said we could be in for a Cold War barriers of trade situation if we don't get something worked out, and that would be not very good for anybody. Us, Asia, everybody would have problems.
Hey, Rich, thanks for joining us, buddy. We'll talk to you soon, and be safe. And stay warm.
Talk to you.
Stay warm.
Bye.
Yeah, bye-bye.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at tfnn.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I've been asked to take a look here at this Canadian dollar. The question was, how do I handle risk and all this election stuff? Well, one of the ones that I like trading, of course, is the Euro #1, which was absolutely perfect last night. The Canadian was pretty good, but you'll notice here, right during the heat of the election results coming in, we had that big spike up. It went above the 78% level by, 15 pips, which was basically, $150. So it was pretty much nothing. The key was the close. You'll notice that it closed below the 78% level. At that point, that's the best place to enter, because if you get filled there and you go back above that high of that doji bar, well, it's actually what do you call it, a shooting man, a hanging man. If it goes back above that, you'll know you're wrong, but it never gave you any heat, and it just kept going. It's continued going down this morning also. So that's, what I'm looking at. I was up almost all night last night because we have an interest with the senatorial race here in Arizona, which is still up for grabs. And so it's going to be interesting to see how that comes out. And I guess that Montana, the old home grounds of Larry Williams, is also potentially up for grabs. So we'll wait and see. I've been asked during the break if we could put up the chart of the December cattle, what we were looking at. Here's an updated move right here. And we'll see that we have this ABCD coming in right at that 114.30 level. You're in a really strong uptrend. Your move from this is really, folks, I show you these charts, but, maybe you don't look at them. I don't know. But if you look at that, look at the move between July and August, and then look at the move between September and October. And in early November, I mean, they're the same size move, same ABCD patterns. After a while, you got to say, wow, maybe this stuff really does repeat. And so sometimes it does, sometimes it doesn't. Now, when we look at the Christmas hogs, and this is one that's interesting because, we're in the midst of China's having all kind of trouble with the, virus that they have. You had a beautiful double top in the hogs where you took out the previous high in September by like 2 ticks, and then the market reverses. I mean, there's no buying up there. I mean, that tells you if it's any good, it's going to go powering ahead, and it doesn't. And of course, you had your big break. You dropped from 160 down to 54. You know, that's 6 cents in hogs. You know, that's a substantial amount of money. And it stopped right where it should have. So those are the kind of patterns that, you know, we try to keep an eye on. They don't always work, of course, but that's neither here nor there. The other one that you need to pay attention to, folks, is the Treasury bonds. They have all the rallying power of the old DCB, so pay attention to that one. It's going to be a real interesting one. Last night we got up to a 382 retracement of that little high that we made back at 139.22, and the market since that time has basically done almost nothing. So we're very oversold still in the bonds and notes, and whether they rally from this level or not remains to be seen. But the overall long-term pattern in the Treasury bonds comes in at that 129 level. That's about 10 handles from where we are, you know, right now. So let's remember that these are only patterns, and they don't work all the time, but they do put the odds a little bit in your favor. That's the main thing. Now, someone's asked a question about Amazon because it's been under a great deal of pressure. Folks, all of these stocks that I try to show here, the only reason I bring these FANG stocks to your attention is twofold. One, I've had 4 or 5 people ask me to look at them, and the second thing is these are the ones that people seem to be trading. So sort of pay attention of it. If you'll know the Amazon, this is a real easy one here because we closed around $1,600. But you'll notice that 1.618 expansion down there at that 1476. Below that, Amazon is going to be in big trouble. But that's like all those stocks. Just look at those lows of October the 28th, and if we take those lows out, we're looking at another big leg down, and it's going to be taking the S&P not to 2,500, but to probably 2,200. So that's always that possibility, you know, that you're dealing with. These markets are not like they were during the election of 2016, folks. They're acting totally different. You know, so, well, at least they are so far. I don't know. We'll have to do one thing at a time. That's basically it. Give me a second here to check to see what's going on in some of these markets. So, well, the euros, we went up to that high again at 27.87 in the S&P, not too much there. The euro's broken about 40 points off the high. Nothing there. Gold is 12.28. If we get below that the low of yesterday, 12.25 in the gold, we're right at the 78% level. If we get below that, then we'd be looking at something that could be, you know, pretty sinister. So let's just remember that that's what we're watching. So pay attention to that. And I think it'll be pretty good. And also watch that crude oil market, folks. You know, we're down a little bit, down about $0.50 a barrel from the high, but there should be some pretty good support coming in around 61.90 to 6,200 in the spot December crude oil contract. And whether that holds or not, you know, certainly remains to be seen. But watch it closely. The the soybeans, wheat, and corn. I think we've got this full moon coming in. Excuse me, a new moon coming in here today, and so tonight I'll be doing all the calculations for the potential good support and resistance in some of these. I'll be sending those out by email and videos to take a look at that because the new moon is today, and we'll watch it. And we have a couple of big things happening next week, which will be really interesting, especially on the 14th of November. That's going to be one that is very, very important because we have no aspects that day. Twice that month on the 14th and the 28th. Pay attention to those because there's virtually no aspects, and history has told us that those mean something very, very dramatically. So we'll watch it closely. Now, I wanted to talk to you just a bit about November here, and this will help kill the time because I've ran out of things to talk about. But November was one of my most memorable months in the markets because it was in 1989. I had a very successful newsletter, Astro Cycles, and I had a hotline, and it was just too much work. I could only do it for about 4 years, and I just got overwhelmed. But I put in my newsletter that month that on November the 9th, that there was going to be something huge that was going to happen. It would be on every newspaper in the world, and it was going to affect most of the world for a very, very long time. And I said, if this doesn't happen, I will give everybody a 1-year free subscription to the newsletter if this is not on the newspapers of all over the world. Well, November 9th came and gone, and nothing happened in the markets, but boy, was it big. It was the fall of the Berlin Wall. And I believe, I don't remember which major aspects they were, but boy, it was right on the money. And I got that from, I think part of it was from Bill Meridian and part of it was from Jim Twentyman. And it turned out, but it didn't do anything to the markets. The market just basically, didn't do a darn thing. So that's neither here nor there. Anyway, we'll keep an eye on some of these things as we look at some of the things here. And then we will be, hold on a second, I got to change in order. Okay, hold on 1 second here. We'll be right back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've been asked to go over what I think are the 2 most important charts of the night. The first one, of course, is the euro. It's a perfect pattern. ABCD, exactly 61% retracement at 115. If we get above 115, that means that the dollar is going to weaken dramatically and the euro is going to increase dramatically. But right now we're only 40 pips off the high, so it doesn't really mean a whole lot. The second one, which I think is even more important, of course, is this stock market one where we were looking at this the 78% retracement coming in on the E-mini S&P up around that 2780 level. We got to 2787 again, matching the overnight high. That was also 50% retracement from the high that we made back in October. And if this is a bearish market, we've been rallying for 7 days. That should be it, and we should start to roll over. Now, anytime we close above 2790, then this all bets are off, and we're probably going to have some more of a rally. But we're right over this full moon today. You just can't ask for a better setup if you're going to be looking at something. So keep an eye on that. That's going to be a very interesting one, to look at. Next week, we're going to have Bill Meridian from Cycles Research as our guest, and also we're going to have Tim Bost out of Sarasota, a very good financial astrologer. So that's something to look forward to. And I want to remind everybody to make sure that you always protect yourself in these markets, because we live in interesting times, and that is a Chinese curse if you're not familiar with it. So be very, very important. Remember what Rich Anderson told you about margin. I don't think anybody here is using that type of margin, so that should not be a problem. But don't try to ever go over 20 to 1. That's more than enough than what you need, because the foreign currencies are set up that way. So it should be pretty easy, to continue using margin on a regular basis. So live every day in an attitude of gratitude, and may God bless. And you're right, it's nap time, Marsha. Who loves you, baby?
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!